This is Capital Ideas TV. Coming up, the CEO of drones for agriculture company Deveron UAS, the longtime head of Globex Mining, on why his stock is massively undervalued, and the CEO of EnerSpar, reviving a mine to feed the booming solar glass market. Hello and welcome to Capital Ideas TV. I'm Mark Bunting. Last week we interviewed the CEO of Drone Delivery Canada. This week, a different drone company and a different CEO. This is Deveron UAS, which specializes in drone data for agriculture, so farmers can increase their crop yields and reduce their costs. It's a growing niche, and Deveron is leading the way. Here's our CEO interview with David McMillan. We were talking with Tony from Drone Delivery Canada recently, and he compares the drone sector to how marijuana was a couple of years ago in terms of it just starting to really ramp up, but also as far as the regulation. Would you agree with that comparison? Is it similar?
I think so. I mean, I think in any new market, there's always the sort of these first movers that identify an opportunity, and the similarities obviously are that Transport Canada is sort of regulating the ways that we can fly drones in Canada. So I think, hopefully we're going to start seeing more interesting opportunities come forward. I mean, obviously in drones, there's hundreds of verticals that you can apply the technology to. And so I think that for us is even more exciting than marijuana. I mean, marijuana is sort of like that one product that obviously there's demand for. But when you start talking about big data and intelligence and really creating like a brand new widget, like there's no market for this technology. It's just starting, and who knows what smart people are going to kind of do with it.
Sure. So you decided to get into agricultural technology or ag tech. Why did you choose that, and describe what Deveron UAS does?
Absolutely, and I think from a high level, we were looking at the drone space, and we were looking at all sorts of different opportunities. And when we started looking at agriculture, it was this huge business. I mean, in Canada and the U.S., we have about 400 million acres of cropland. So looking at it as a service-based business and selling data to farmers to help them increase yields or reduce costs on the farm, it's a really valuable product. So that's sort of what excited us. We saw $10 billion from Silicon Valley going into the drone space, but also $10–15 billion going into ag tech. So there was sort of this, like, I guess, mutual change happening of drones were becoming possible to use commercially, but farmers were also going through digital revolution. So it's one of those last verticals, I think, in the world to see computers and data truly transform how decisions are being made. So that was, as an entrepreneur, when you're starting to look at new markets, you think, holy smokes, like there's a huge market opportunity, new technology, first mover advantage, and that's sort of why we settled on ag tech as a place to focus.
So explain your offerings. You don't have to dumb it down, but in layman's terms, and as far as the sort of imaging offerings that you can offer farmers.
Yeah, and I think it's sort of a simple process to think of. 50 years ago, if you were a farmer, you would walk out to your field and you'd look over 150 acres from the side of the road and you'd try to make the best decision to grow the best corn that you can. Now what drones allow us to do is actually fly over that farm and take lots of pictures of it, and then at the end of the day look at that whole field from a bird's eye view. We can use really high resolution then to give the farmer a very interesting look at what's going on in his field, and it's really the first time that farmers can make decisions in season. So usually what happens is a guy decides to grow his corn, he's going to put some nitrogen down, and then he just crosses his fingers and hopes for good weather. We can actually show someone in July, hey, there's a lot of stress going on in this field with the data that Deveron generates, and they can make a decision to maximize their yield in season, not at the end of season for next year. And I think that's a very transformative idea and opportunity for farmers to actually make more money.
Now, your company doesn't go door to door knocking on farmers' doors. You deal with big agricultural and farming companies. How did you decide on that strategy, and how does that work? And who are some of your customers?
So I think this is the beautiful thing about building a business. When we first started the company, we were trying to find anyone that would buy this data. We had a fleet of drones, and very quickly I realized I couldn't call 15,000 farmers across Ontario. And the way agriculture is organized, there's sort of crop protection companies, seed companies, and what's called agronomy retailers that they already have these established relationships. They're selling product to individual farmers, and we looked at them as sort of our shelf space. So we sell to these large players, anyone from Thompson's, we're working with big crop protection companies across Canada, we're working with seed dealers that are using the data all in different ways to basically help them sell their product in a more informative and new way. So for us, we only have to kind of know 20 people across Canada that touch the 80 million acres of farmland that exists. And obviously that becomes a manageable relationship for me to build.
What are the barriers to entry in your sector, and do you have competition? You mentioned you've got first mover advantage. Why do you think you have that?
So there's a few things. I think first and foremost is we're building a network. So one of the problems with drones right now in ag is that it's a very inefficient way for a farmer to buy a $30,000 drone, fly his field 2 times during the year, and really amortize the cost of it. It's better if drones are working every day, all day, for multiple people. So we've situated sort of a hub and spoke system of drones and pilots across the country where people can order on-demand imagery and data, and then that way our drones are working every day. They can work for multiple people. So there's sort of a barrier to entry that in a network, and then the big one is also being able to work with Transport Canada. So the drone industry is regulated in Canada. There's a licensing process called the SFOC. So Deveron is one of the only companies in Canada that has a national license, so we can fly drones in any province. And within that we have special operating procedures that allows us to do our job more efficiently than other people. So it's sort of like a two-way moving street of the network effect that allows us to be lowest cost provider, but then also we've got the regulatory team on our side that allows us to operate more efficiently.
And are you making money yet?
Yeah, so last year we made money in our financials, and that was sort of like our MVP year or beta test of this idea. Can we build a network? Will big farming companies start to use us, and will they buy this data? Is there value in this intelligence? And I think this year what everybody is going to see is that we're starting to scale. We're starting to get people go from pilot study to multi-year deals, and we're starting to get people actually growing the number of acres that they're using. And that's exciting for us, and I think that's confirmation that we've identified this trend and that we're working with growers and everybody in the farming industry to really drive value in the data.
And why are your margins so big? They're around 80%, am I right?
Yeah, so I think long term, that's where we're headed, and I think all service businesses kind of get to this perspective of the more actively we're working, the more quickly we can amortize the costs of fixed capital. So once we buy the drones, we actually don't have that many big overhead weighing costs with respect to going out and collecting the data. And the reason why that happens is because our drones are flying every day. So if you can imagine having to amortize the cost of somebody who's flying drones and only flies once, obviously that cost of data collection is quite a bit. But if they're doing 6 flights a day all summer during the grow season, our costs are quite minimal.
And what kind of cash position are you sitting on, and do you need to raise more money to continue to grow?
So we just completed a roughly $2 million private placement. That closed, I guess, at the end of May. So it puts the company in a really nice position of we've showed that there's this revenue opportunity. We can start scaling the network across Canada. We already have drones operating from Alberta out to Quebec. So from a capital position, we're like in the best shape we could ever be. And it's really a question of now, can we go out and start closing even more deals through the next ag sale season, which is September into February. And then we'll have the capital there to continue to buy more drones, build the network, look at other opportunities potentially in the US. Because ultimately what we're trying to do is build like North America's largest constellation of drones. So anywhere that you would be in North America that you need drone data, you can call Deveron, get it on demand, get it delivered, API server in. It's removing all the workflow for anyone that's trying to make decisions from aerial intelligence.
And what are the risks for your momentum? What are some of the obstacles that can get in your way?
First and foremost, I mean, farmers are pragmatic. So it's very much a relationship-based business. So for anyone to kind of come in and convince a farmer that, hey, we're going to change the way you farm, they've been sold snake oil their entire lives. So I think for us, there's the challenge or the risk is really just having the ability to work with these guys as they start to see value. So the minute we can show people that they have an ROI on their farm, they're now able to tell 5 of their buddies at Tim Hortons. And then next thing you know, everybody is starting to use it. The problem with egg is that when we make a decision to use data, we have to wait the whole year to sort of validate that there has been this ROI, because they have to bring the corn out of the ground. Right. So it's not like if we were a high-flying technology company in consumer services where we can launch a new product and have immediate feedback the next day. The egg cycle is sort of a year-long thing. So I think that's sort of the risk, is just really, are we going to continue to survive the time that it takes for farmers to really grow their adoption rates? And that's something that all ag tech companies face, right? It's, you go from 20% adoption to 25% adoption, but that can't happen in 3 weeks. That will take a year. Right.
And lastly, David, if you had well, you do have investors in front of you through the camera here. So if somebody were to say, well, they look a little small, it looks a bit risky, and it's not for me, how do you convince them that you're a compelling investment?
I think there's 3 things. One, the people that we've brought into the company from day one when we first concepted the idea are very large leaders in the Canadian tech industry. Roger Dent, who many people in the microcap world may know, is on our board. So I think that adds to our validity and our vision of becoming truly an institutional play at some point as we scale revenue. And I think the other thing is, when we first founded the company, I think we did our initial raise at a valuation of $2.5 million. Our last round was done at $7.5 million. So in the last 12 months, we've tripled the value of the company, and that was without really having much market penetration. So this year we've signed up more customers, we're starting to grow our area of interest, we've done work in the US. So all these things are starting to come in place to say, we'd love to be a $100 million company today, but the reality is when you're starting something from scratch, it takes time to develop the market. And I think people should be looking at the revenue opportunity of, this is a brand new thing. It's not like we're creating a widget 2.0. It's a new widget. And we've proven that people will pay for this data, and this intelligence has the opportunity to truly change the world. And we've seen it happen in France, we've seen it happen in other countries where data is driving decision-making in farming. And I think if you look at even the satellite industry of where it's gone, many people probably have followed Earthcast as a name, right. And you can see where things can start to scale very quickly as you get buy-in.
Some insider activity for you now. This is where we look at officers and directors and the various insider buying and selling that they've been doing in the companies that they're involved with. We'll start with Student Transportation, where the CEO recently bought 84,000 shares around those levels, increasing his stake by 75%. A lot of insider buying at Student Transportation. The CFO, since February, has increased his stake by more than 200%, and the COO, again since February, increasing his position by more than 1,700%. On the flip side, we have Revive Therapeutics, where the CEO has sold nearly 1 million shares recently, 940,000 shares, taking his stake down by about 40%. Imagine if you ran a company and the markets refused to understand the business model because it was just a bit too complicated. That's the case for Jack Stock, the CEO of Globex Mining, which he's run for years. During up mining cycles, the stock has done fantastically well, but during other cycles, the stock goes back to being unloved. Here's our conversation with the CEO of Globex Mining, Jack Stock, where he'll explain what a property bank is and why he thinks his shares are massively undervalued. You describe Globex Mining as a property bank. How do you define that? What do you mean by that?
We're a company that specializes in the acquisition of assets. We acquire any asset that we think has intrinsic value. We take that asset and we basically put it in the bank, and we do enough work to make the asset value very evident, and then we wait for the markets to turn so that that value is going to be something that other people want, and then they come to pay us to acquire that, and they give us interest in the form of cash, of shares and work. They take on all the risks of it, and they carry it forward.
One of the things you mentioned the last time we talked was that model is difficult to describe to investors and to Bay Street sometimes. Is that still a problem and a frustration?
It's still a frustration of my own making because we have so many assets. We're on the way to having about 160 different projects. The number themselves make it difficult, plus the fact that we're diversified. We have like 72 precious metal projects, 47 polymetallics, so it would be copper, zinc, nickel, so on, and 32 specialty minerals. So we have all kinds of specialty minerals, vanadium, feldspar, silica, all kinds of things that people aren't familiar with. They don't understand the value and the potential. So it's difficult for people to focus on what we're doing. We specialize in being unfocused. Investors generally like to be focused.
How do you keep track of all that?
We have excellent staff and computers.
All right. How undervalued do you think Globex is right now compared to where it should be trading?
Oh, God. In reality, in comparison to other companies, Globex should be trading somewhere in the $5 to $10 range.
Really?
Well,
and you're under $1 right now.
We're trading at about 50 cents.
Okay.
It's just absolutely ridiculous. If you look at some of the deals that we've made, for example, on the Enforcer, the gold project, we have cash payments coming in. We have a big share position. They have to do $15 million worth of work. After 6 months, and this is no disrespect, this is part of our model, is disseminating the risk out to other people. They have more shares out than we have, and they're trading at 20 cents on one of our projects. So how does that make sense? And they still have to do more work, spend more money, pay us more cash. It doesn't make sense if somebody takes the time and looks at the intrinsic value of the company. And we have no debt. We own everything.
Right, including your buildings and
buildings,
other
vehicles,
assets.
everything down to the pencils.
You've also said that Bay Street doesn't understand it because you don't do financings very often, if ever. You did one recently, but is that part of the problem too? You don't get enough coverage or love from Bay Street?
Yeah, we make money, which seems to be a sin. Bay Street likes you to come to them so that they can get shares, and then the stock moves up and they work on the stock. We go out, we do, like after, the company's been listed for 30 years. We only this year reached 50 million shares out. We've never done a rollback. And that's because we actually make money. So there's no intrinsic reason except for well-educated investors to actually invest. From the brokerage firms, if we don't do deals with them, why would they follow us? Why would they recommend us? Why would they take a position?
You mentioned 30 years, and you do have a track record. So during downturns in the mining cycle, you're opportunistic, and then you ride the wave in the upcycle, and your 20-year chart shows that. You've had some huge runs. Yep. So where are we in the cycle, in your company cycle right now?
We're just touching off the bottom of the cycle. We were down when things were really horrible over the last couple of years, down in the 25-cent range. We've doubled relatively recently, and we're starting to. What's happened now? The thing that's different is that the market is improving. The companies are recovering, and new companies are coming on board. They're looking for assets. During all this negative period, we were acquiring assets. Now they come to us and say, okay, like right after this interview, I'm going to a meeting, somebody who's interested in the copper, nickel, cobalt project that we have. So the market has turned. The intrinsic value of our assets is going to be recognized through an inflow of money and shares and positions in other companies.
You mentioned Enforcer. You're excited about that one. What about EnerSpar? Explain your relationship there, and what can you tell us about that?
Okay, EnerSpar is a property that we picked up. It's literally on the north shore of the St. Lawrence River near a little town called Joanne Beats, and it is a feldspar property. Most people, this is another one of the example, people don't know what the hell feldspar is.
I didn't until I did some research and realized that it's one of the most plentiful minerals in the world.
Yes, it is. But specific feldspars, like potassic feldspar, are not that plentiful and not economically mineable because they're not in big enough concentrations. So what the feldspar is used for ceramics, it's used in fiberglass, it's used in whiteware, dishes, and so on. But the big use that's coming up right now is for solar panels, for glass for solar panels. And the biggest mine in the United States has shut down. It's been shut down for 2 years. They need supply. They're getting it from Italy, they're getting it from Turkey. 40% of the cost of for the end user in North America is transport. This particular project is literally, there's a loading dock on the property. So if it was in production before, if you can put it back into production, you're going to be able to kick the ass of all these foreign suppliers for meeting the North American market. It's just a tremendous project.
Great. Anything else you want to talk about, Jack, we haven't touched on?
The only message to shareholders really is that Globex is a diversified company which has a huge bank of assets. We have no debt, we own our assets, we have revenue, and we have ounces in the ground, we have lots of gold in the ground, we have lots of base metals in the ground. We have 44 royalties. We've got the one in the United States, which went into production in May. And if the price of zinc stays where it is, we'll be getting between $1.5 million and $2 million a year in revenue just from that one project. We have a lithium project in Quebec owned by an Australian company called Sayona, where we have a royalty on the center of the open pit. They're projecting to be into production by around 2019. More royalty revenue. We have option revenue. We try not to dilute our shareholders, and we're a true value play.
Some 52-week highs and lows for you now. Oftentimes, when these stocks are hitting these levels, they go on to higher highs and lower lows. We'll start with Western Forest Products. Over the last year, bumping its head a few times at 220, but breaking through it meaningfully here, hitting multiple 52-week highs. On the other side, how about Trillium Therapeutics? This is the lowest level for this stock since the company went public on the TSX back in the mid-2000s, breaking through support at 625, hitting multiple 52-week lows. EnerSpar is looking to revive a mine in Quebec that was active in the 1950s. Back then, it produced feldspar that was used to make ceramics, things like toilets. Now, EnerSpar wants to use feldspar to feed soaring demand for solar glass panels. Here's our conversation with Jay Richardson. First off, Jay, could you describe what feldspar is? Because I've read about it and learned about it, and it's way more plentiful than anybody would think, probably.
It is a very plentiful mineral, but the kind of feldspar that we're after, the potassic feldspar and the soda feldspar, are the two rarest of a broad category of feldspars.
And it's used primarily, and you want to use it for solar panels.
That's correct. It has traditionally been used in ceramics, glass manufacturing, various other, but those have been the two main consumers of feldspars over time. But now the orientation is specifically to solar glass because it is particularly suitable as a hardening agent for solar panels.
You were telling me off air about this mine, which was in production from 56 to 59, and then in the mid-1950s, for different purposes, of course. So tell us why it's taken this long, and why the interest now to start this back up.
Well, it's only relatively recently that the solar glass industry has taken on a hockey stick kind of appearance of expansion very rapidly of production capability. There have been other sources of feldspars. There have been potassic feldspars produced in North Carolina up until 2-3 years ago, when that mine then got exhausted. That was accounting for about half of North American production. So there now is a serious deficit in North America. North America is now importing at considerable expense in terms of landed cost from producers in Italy, Turkey, China, typically.
Now, you're a micro cap, market cap of under $2 million. What's the risk reward there for potential investors or current shareholders?
We're a micro cap, certainly. We have come out of being a CPC, and so people really do not know of us.
We're a capital pool company.
That's correct. Right. People don't appreciate what the opportunity here is, and candidly, we have not yet started into any really overt program of investor relations. It's only at the beginning of April that we began trading again. We've been concentrating on finding the geologist to undertake the summer exploration program. But in terms of opportunity, we see the chance to outline a resource in very short order, which we think will then make us a very attractive opportunity for takeover. And there are several candidates, including the one that I just referred to of the former producer in North Carolina. That's a Canadian-controlled company called Imerys, controlled by the Deveron. They continue to be very heavily involved in the distribution business, but they don't have their own production at this point. So we think that it'll be kind of interesting for them to have a look at it on their own doorstep in Quebec, incidentally.
So take us to that point then. What's the timeline to get there?
We think that we can outline a solid resource that will be attractive to them within 24 months. 24 months. And tell us about some of the geographic advantages. So you mentioned it's in Quebec, and you're right near the St. Lawrence. We are, in fact, right on the St. Lawrence. It has its own wharf from when it was in production in the 50s. That wharf, of course, is in disrepair at this point, and so needs refurbishment. But it does mean that it has direct access to salt water. And so from the standpoint of shipping costs, this is a very attractive location. It's just off the highway that goes along the North Shore, so road access is good. Power is on the doorstep. It's 3 kilometers away, parallels the road that goes along the North Shore. So we have many advantages in terms of location. Lastly, Jay, is there anything else you want to get across as far as the investment case for EnerSpar? I think that it is a conservatively managed company. It has a good, tight hold on its treasury. It intends to continue to have a good, tight hold on its treasury. It, to me, has all the characteristics of an underappreciated junior that could really pay dividends very rapidly.
From the heart of the financial district in downtown Toronto, that's our show for this week. I'm Mark Bunting. Be sure to subscribe to our Capital Ideas TV YouTube channel so you don't miss an episode. And if you want more great investment ideas through our weekly digest and daily morning note, subscribe at capitalideasresearch.com. Thanks a lot for watching. Thanks for investing like a pro. We'll see you next time.